So tonight's class was supposed to be supply and demand, but what I want to do instead, I want to do a review on what we did so far. Because so far we would have done candlesticks, we would have done support and resistance, we would have done trend lines, we would have done a charting software session for you all to understand the charting software, and we would have done Fibonacci's. All right, and based on some of the homework, I want to kind of recap before we move on to supply and demand. All right, so what I want to do, I just have blank Euro US dollar chart up here. I'm not going to zoom out too much because I feel like I have enough data in front of me where I could see what's going on. All right, so basically what the market is doing here on this side here, we are making lower lows and lower highs, where we could see if we started at this point here, the market formed a high, formed a low, formed a lower high, formed a lower low, lower high, lower low, lower high, lower low, and then from this low point here, the market pushed up. At this time, like when we were right here, this was still a lower high, but then we formed a higher low, which at this point we still haven't broken any trends as yet, because we could still be pushing here, come here, and then continue to fall. But what the market did from here is finally make a higher high, taking out this previous high. And then we started pushing up, making higher highs, higher lows, higher highs, higher lows, all the way up, right? So we could have a higher high here, higher low, higher high, higher low, higher high. This is where we're currently at. All right, so we have enough data that if we were mapping out, we could see that this is what the market was waving down like this. And then we started waving up like this. All right, so based on that, where we're currently at, I think Euro US dollar, this is the 4-hour chart. At least on the 4-hour, we're still in an uptrend because of this most recent push. What we should expect next, just like we did before, is some sort of correction. And as long as we don't take out this low here, this is our secured low. As long as we don't take out this low, we should see this market reject and then continue to go back up, making higher highs and higher lows. If we take out this low here, let me just do this. If we take out this low here, and let me just change the color. If from here we start to wave like this, just like we did before, and then we start making lower lows and lower highs, then we know we could start to look to sell here for the market to continue to push down. But based on the information in front of us, this is where we're at. So let me clear this screen, and we want to go through piece by piece, right? Clear screen. Again, I'm just dealing with what's in front of us here. If this is where we were at, we could come in and we could say, you know what, based on trend lines, if we start at this high point up here, and you basically draw a line and you swing it down like this until it touches a point between the lowest point and the highest point, this would be our downtrend line. And again, based on what we said, the market pushed off of this downtrend line. So again, breaking it down piece by piece. If we were trading trend lines, the market rejected this trend line here once, rejected this trend line here twice, came very close to it, but then here we finally broke the trend line. So this says that this downtrend is potentially over at this point right here. And it's over because the market is no longer respecting this trend. If it was respecting the downtrend line, then from this push up here, the market should have held and then continued falling lower, which it did not do. So that tells us, you know what, my bias now should switch to bullish. Can you use this alone? Yes, because you could have entered right here. You could have had a stop below here and maybe go after 1 to 2, something like that, or maybe go after this high here. And as you can see, the market did work its way up to take out that high. Right? So could you have entered here? Yes. But the reason why one of the ways to have a more successful trade, right, and the reason why we look for all these different convergences is by identifying more than one reason. You don't want just one reason to enter the market. So in this example here, if we said, you know what, this is our downtrend line that the market broke, we could buy. So that's one reason to buy. Then, based on the analysis that we did previously, this low here, this high, higher low, and then this push also gave us a higher high. So that's a second reason to buy. The third reason to buy would have been in this area here. If we zoom in, we could see that what? Remember, based on what we did so far, support and resistance, right? Remember, support and resistance works on trend lines as well. So the market found resistance here once, pushed down, found resistance here twice, pushed down. But when we broke, the market came back to the back of this trend line and found support. At this support, we have a nice bullish engulfing candle here. Right? So based on that, we could then look to buy this market. So again, we would have had trend line break, one. We would have had market structure shift, meaning going from lower lows to making lower lows lower and lower highs to higher highs and higher lows. So the switch in the trend line break, three. And then on top of the trend line break, found support at the back of the trend line. So you see how in that example there, we had 4 reasons to buy this trade. That's what you look for as a trader, right? When the market started going up, watching what we have in front of us here, to draw the trend line, we would have started at the lowest point because we're now on an uptrend. You swing it across, and you swing up until it touches the market. So as you can see, the first place that it touches is here. This becomes our uptrend line. And then what you do is you do that same thing over again. You start at the point that it touches, swing it out, and come up again. And you can see that the next place that it touches first is this area here. So these becomes our uptrend lines. Next thing we want to look for is how the market is waving up, right? What is the market doing? So Fibonacci's. And to be clear, again, based on some of the homework, Fibonacci's, you don't just choose a random high or a random low and spread your fibs, right? In an uptrend, you start at the lowest point. So again, just based on, I'm not analyzing the full chart, but let's say based on the most recent chart that we have in front of us here that we're looking at today from this area here, this is our lowest point. So my A for my Fibonacci is going to be here. And then I'm going to work my way by each candle to find my first high, which becomes my B. Because we're in an uptrend, right? So let me just zoom back in. A becomes here. And again, I need to look, remember the definitions, right? A low is identified as a candle that has 2 to the left and 2 to the right higher than it. So this here is my lowest point. When I start to go up, I want to find a high. So I'm looking for the first candle after this point here that has 2 to the left and 2 to the right lower than it. So if I go here, this has 1 lower than it, but this candle is higher than it. So this doesn't count. This candle here has 1, 2 to the left, but not 2 to the right. And as we go, that is how you work through until you find the first high. When I come to this candle here, it has 2 to the left lower, but not 2 to the right. Each one that you go through until we reach to this candle here, which has 2 to the left lower and 2 to the right lower. This becomes your B. So in terms of us plotting our Fibonacci's, we'd have our A just now. This becomes our B. Our C could go here and our D could go here because those are flexible, right? Meaning it would be adjusted. So now I'm going to take my Fibonacci's And I'm going to just use the magnet tool so it would be exact. I'm going to start at this low, A to B. That's my first Fibonacci. I'm going to take some lines. And this is one of the easy ways, one of the tricks to do it is this, right? You're going to take 2 lines. You're going to start at the A and bring it up, on again, just like you do with the trend line. And the first place it touches, that's your C. So as you can see, the C in this example here, right, came to the 618. So you expect the market to have enough energy to go up to the red line. You put your target by the red line. And then again, once you hit that red line, you're looking for a high. First candle to the left, first candle to the right. This candle here becomes your completed D extension. And one of the easy things to do would be, and let me just map it out. Right, so we're gonna go A to B, B to C, C to D, completed. Now, our C becomes our A, our D becomes our B. We're looking for a new C and a new D. Gonna spread our new fibs from our A to our B. And then you move your lines up again. First point that it touches is C, which is here. Again, 618, it didn't quite come to the 786. So that means our D extension that we'd be looking at would be at this level here. So if that's what we're looking at here now, again, once it hits 2 to the left, 2 to the right, this is our confirmed high. Repeat the exact same thing. B to C, C to D. And this is what you do until you get to current market. C becomes A, and you do it over again. C becomes A. Sorry, let me take off the magnet tool. C becomes A, D becomes B. You're looking for a C, and you're looking for a D. Reset, put this down here. Right, that becomes a new A, a new B, exact same thing. Spread the Fibonacci's again. You're looking for a new C, which as of right now is right here. With the magnet tool on, just now I want to move the C. Alright, let me do this. Move up a line, A, B, C, based on where C is right now. Trade 2, so we still expect our D extension to come up here. We're waiting on our D. Is everyone with me so far? Just type in a Y in the chat box so I'll know that you all are with me, please. So in other words, this is how you get to the current market. Once we're at the current market, we're looking to trade in that direction. So based on what we're seeing in front of us here now, we're looking to trade bullish on Euro US dollar until it reaches 1.18941. So now we look for reasons to enter this market based on what we're seeing in front of us here. So if you didn't enter this area here, we have our uptrend lines. We're at current market. We could see that the market again right here was making lower lows and lower highs until we came to this area here and we started making higher highs and higher lows. So that's a good sign. So that means the retracement from your B to your C could potentially be over. One of the ways to measure this movement here would be by a downtrend line or a counter trend line. So a counter trend line, remember we already identified our trend is bullish, right? So the trend is bullish or going up, right? So if the trend is bullish or going up, that's our uptrend line. So when we draw our uptrend line like this, and you come and draw a trend line like this, those are counter trend lines. If we draw a downtrend line like this, and then in measuring the downtrend line, you come and you say, you know what, the market is moving bullish like this, those are counter trend lines. Counter as in going against the trend, right? So again, just like the market would have done with regular trend line, the market would have bounced off of this trend line once, twice, and then the third time we finally broke the trend line. So again, just like we did before, based on the type or the style of trader that you are, you could say, you know what, we're in an uptrend, 1, 2, this market already bounced and bounced off of an area of resistance becoming support, because if we just look at this level here, we could see that the market was pushed down once, twice, 3 times, broke, came back, found support, and is now potentially going up. So that's another sign that we're bullish. So that's 2. We have the counter trend line break. We have the support, resistance already becoming support. That's 2. We have the uptrend line. That's 3. We're in an uptrend. That's 4. So that's like 4 reasons why we should be buying this market. So you could have taken a buy trade here, put your stop beyond this level, and your target, because we know where we expect the market to go, your target is up here at the D extension. So you would be still in this trade active, but you would be positive, because you would have currently been up, let's say, this is currently 107 pips. At max, you would have been up about 150 pips or so, 160 something from this entry here. So you see how everything is coming together. What I need you all to do, so today's homework, right? When I give the homework in a little bit, because again, I want to run through another chart again. I need you all, when you all submitted the homework, I want you all to, 1, label, not just A, B, C, D, because I'm trying to understand what you're thinking, right? If you're saying, you know what, I want to enter here, I want you to just go to the text box and literally just put whatever the reason is. So if you're saying buying now at CTL counter trend line break, then I could know, all right, that's the reason what you're looking to enter, and I'd be able to say, all right, yes, that is correct, or no, it's not correct, and that's how we would go about it, right? So you're not just sending me a chart with if it's just Fibonacci's or if it's just some lines. I need some explanation to know what you are thinking, and that's how I would be able to correct accordingly, right? As I said, I went through this one again so y'all could watch this video before you do it, because what I want for homework for tonight's session is everything that we did so far. So trend lines, Fibonacci's, candlestick formations, and support and resistance. So that's what we are going to do. All right, so let me just look at another chart. We did euro. Let's maybe do Aussie Swiss franc. All right, if I zoom out, I can clearly see that this market is falling. We're going down. Based on the information in front of us, if we start at this level here, we could see that we were from this high point here to this low point. That's the lowest point. We're basically making lower lows and lower highs. We pushed down, corrected, worked our way down, corrected, and this is where we're at. So based on where we're at, I can see that we're on our way down to potentially make a lower low than this low. So this would be our trend direction. So if I say we're in a downtrend, I'm going to come to draw my downtrend lines. And again, I'm simply going to start, because this is a downtrend, I'm going to start at the highest point and I'm going to swing it down until it touches the chart. So the first place it touches is right here. And this point is in between the highest point and the lowest point. Now, maybe I'll draw one more. Let me see. I'm going to say start at the place that it touches, swing it across. Just now. Let me do this. Reset. Start at the place that it touches, swing it down, and what I'm going to see is this. The first place that it touched this time was here. But based on trend lines, that's not correct because this is a point beyond the lowest point. Remember, what we're trying to measure is between this high and this low. So until we make a lower low, this point is beyond this point. So I need to keep swinging. And again, if we go down, you would say the next point is here. But this is also beyond this. So I need to keep going again. And you'd realize that the next point that it touches is right here. And this is between or before this low point here. So that is a correct trend line. And the reason why you'll draw it like this, right? It needs to measure, or it needs to account for in a downtrend, the points between the highest point and the lowest point, not beyond it. And in an uptrend, the same thing. You're looking to account for the points between the lowest point and the highest point. Alright, so this here could potentially be a counter trend line break. If the market pushes up, it could work its way back up to this one. If it breaks this one, that's longer term, and it will continue going bullish, right? But for now, that's what we have in front of us. So now I'm going to start at the highest point. I'm going to do fibs. Because of how compressed this is, I want to do auto fibs, right? Because I figured this would have gotten taken out. I'm going to start here again. Let me see. And this one might be messy, and you'll get that sometimes with fibs until we work our way down to the most recent fib. So again, just like we would have done before, all I did was use the auto fibs, right? But what I'm saying is this. You take your lines, 2 lines. We're going to come down and say, you know what, this came to the 618. So if it came to the 618, I expect the market to fall all the way down to here. So I'm just going to be looking for selling opportunities as this market works its way down to this area here. And then when we zoom in, for instance, this example is a little different to the Euro US dollar. We could see that if this is our C and we're working our way down to our D, right? If based on our fibs, and let me just label it, based on our fibs, A, B, C. We expect D to be here. Sorry. Right. The market working its way from C to D based on how big the move is doesn't necessarily have to move in a straight line. It could also wave. And as it's waving, you could see that we're getting smaller waves, right? A, B, C to D, A, B, C to D, and that's how it could wave, working its way down. And if the market is waving, then it means we could then come and start at C as our high point and plot Fibonacci's again to get sub Fibonacci's. And you could see we would have had A, B, C to D, A, B, C to D, and this is current. We have a sub fib here, again, just bringing you two lines. And because of what we're doing, the two lines starts at the top because we're in a downtrend. So again, the first one comes here, you said, you know what? We came within the 618, we didn't come back to the blue, so we have enough energy to fall to here. So then it means if we were looking at this from before and we pull back to here, we could see here we have a nice bearish rejection at the 618. So we could have entered here, and again, just like we did before, if we entered here, we're still in the trade, but you realize we are positive. All right, guys. So that's what we did today, is analysis to the current market. As I said, before going on to supply and demand, I wanted to recap what we did so far. So for your homework, and again, I need you all to take the homework seriously. Those of you all who do the class live, those of you who don't do the class live and you watch the video, I need you all to, because that will tell me if you are really understanding or not understanding it. I can't stress that enough. As I said, everybody here is adults. You all paid for a program. But I told you all my program was different from the point of view of I'm not just going to sell you these videos and it's just recorded videos. To me, that doesn't make sense. The point of this is at the end of the program, I want you to be able to analyze charts on your own, look for setups. You have a skill now that you could then trade moving forward. All right. So for your homework, just like we did today in class, I want you to take a blank chart, any chart. Take a blank chart. No analysis. I want you to, you don't have to go. I want to see that you understand the concepts. So ideally, when we're doing like actual live market, you're going to start all the way back. I don't need you to go all the way back for now. If this is what you have in front of you here, and you say, you know what, I want to do my analysis from here, I want you to then identify the highest point. And again, using the two lines makes it very easy. Put a line at the bottom and the top. And all you do is move the line until it touches. So in this instance, you would say this is the lowest point. This is the highest point on my chart. So if this is all the information I have, I could see that we are going sideways or we are pushing down. And if you identify sideways, if you identify a range, then I don't want you to look at our chart for right now. So for instance, this chart here that's not really trending, right? We had a big push down. Big push up, just not all the way back up, but then we've been very sideways. This market is not trending. What we're doing right now, I want you to understand the concept of a trending market. So then all you do is change to another pair. And if we're in this pair, excuse me, and we could see here that this market, this one is moving. Even so if I do, you could see that we are moving, making lower lows and lower highs here. I want you to do the analysis based on that. So what I need to see in the homework, as I said, you do the screenshot. I showed you all how to do it last time. There's the camera button right here. After you mark up the chart. So for instance, if what did we look at? Euro US dollar. And if this is what your charts look like after, as I said, I want you to put a note. So you will put a text right here. I did not text because it will have audio attached to this video, right? But for you who are just sending me the screenshot, when you put this, I want you to say the market is in an uptrend. I'm looking to buy, or I would have looked to buy around the C area for me to understand if you're talking about buying a counter trend line break based on what we discussed. You see the market broke this counter trend line. so I'm looking to buy. So I would get, all right, yes, you're picking it up, or no, you're picking it up, or maybe you missed something. You take a screenshot of that, and then you just send me an email with that. All right, guys, so that's your homework for next week's session. This video would be up over the weekend. As I said, y'all, last time I shared with you all the link for the playlist. So the playlist would continually be updated where you would see the videos for the sessions. I'm not going to send you an individual link again. So Saturday, what I will do is it'll be posted. And once it is posted, you simply go back to the playlist, click on the playlist, and you would see the latest session added, whether it's session 5, session 6, and so on, added to the playlist. Alright, if you all have any questions or anything like that, go ahead and send me an email. Go ahead and submit your homework, guys, and let me go through it in time so that I can get back to you before next week's class, guys. Alright, so that's it for tonight's session. Have a good night, guys.